So today we're going to break down a classic case of market whiplash. We're talking about the Indian markets on December 17th. They started the day looking really strong, full of promise, but, well, they ended with a bit of a sting. Let's get into exactly what drove this big reversal.
Yes, so the big question on everyone's mind is, why? The markets opened up firmly in the green, looking great, only to completely flip and end in the red by the time the closing bell rang. What on earth happened in just a few hours to totally reverse the entire mood? Okay, so let's start with the reversal itself. This was a textbook case of a promising start that just went sour, and you can bet it caught a lot of investors completely off guard. And you know, the numbers really do tell the whole story here. We kicked off the day strong, right? The Sensex opened at 84,856 and the Nifty at 25,902. But then, boom, look at the close. Both of them slipped into the red. That is a serious turnaround for one day's trading, and it signals a big shift in thinking.
So if we zoom in on the Sensex, it finished the day at 84,560. Now, a 120-point drop might not sound like a catastrophe, but what really spooked the market wasn't just the drop, it was how it dropped. It was that reversal from the day's high that got everyone nervous.
And it's pretty much the same story over on the Nifty 50, closing at 25,819. But the really key thing to notice here is that it broke below the 25,900 level. That's a huge psychological line in the sand, you know? And falling below it basically confirmed that all that positive energy from the morning, yeah, that was long gone.
All right, so we know what happened. Now let's get into the why. What were the big forces at play that managed to push the markets down and just completely erase all those early gains?
So it really boiled down to three major headwinds hitting all at once. First, the rupee was all over the place, weakening past that 91 to the dollar mark. That makes Indian assets more expensive for foreign money. Second, and this is directly related, we saw heavy selling from foreign institutional investors, the FIIs. They were pulling a lot of money out. And third, all of this was happening against a backdrop of global uncertainty, with everyone kind of holding their breath, waiting to see what the US Fed would do with interest rate.
And just to put a number on that FII exit, a net outflow of 2,381 crore rupees. I mean, think about that. When almost 2,400 crore just vanishes from the market in a single day, that creates this massive wave of selling pressure that just, wow, it's almost impossible to fight against. But here's where it gets interesting. The selling wasn't across the board. We saw a really clear split between different sectors. PSU Banks were actually a bright spot, gaining 1%. But on the flip side, media stocks were really feeling the pressure, falling by the same amount. So this tells us it wasn't just a panic sell-off. Nope, this was smart money rotating, moving out of one area and into another.
And that story of rotation naturally leads us to the day's biggest individual movers, the specific stocks that really defined what was going on.
Okay, so let's look at the day's leaderboard, the real movers and shakers. On the green side, IGL and Reliance Infra had fantastic days. We also saw some real strength from Shriram Finance and SBI, which ties right back to that momentum we saw in PSU Banks. Now on the losing side, look at those names. Big private banks like ICICI and HDFC Bank were feeling the heat, and that ties right back to those FIIs pulling their money out, right? But you know, amidst all this red ink and this messy, choppy action, there was one stock that just completely stole the spotlight. It was the viral story of the day for sure.
I mean, think about it. The whole market is down, but one stock didn't just ignore the trend. It absolutely exploded in the other direction.
Yup, a massive 20% gain in just one day. That's what we call hitting the upper circuit. The stock moved so fast, so high, that they actually had to halt trading in it. So what was this superstar stock? It was Meesho. And the catalyst was a huge buy rating that came out from the global firm UBS. That single positive call was all it took to send the stock rocketing up 20% to lock in at its upper circuit of 216 rupees. Just an absolutely incredible move, especially on a day like this.
Okay, so after a wild day like that, the big question is, what's next? Where do we go from here? Let's turn our focus to the key things you should be watching.
You know, when the market gets all choppy and uncertain like this, those technical levels on the charts become super important. They're like signposts. And right now, all eyes are on one key level of support that could really decide the market's next move. And that magic number is 25,800 for the Nifty. Seriously, think of this as the market's current line in the sand. If the index can stay above it, the bulls can argue this was all just a little temporary dip. But if we get a clean break below 25,800, that could really open the floodgates for more selling. That is the number to watch.
So, all of this leaves us with a really important question for you to think about. In a market that's so divided, so choppy, where do you find the real opportunity? Do you go bargain hunting in those big names that got beaten down, or do you chase the momentum in the outliers, the stocks that are defying the trend? That's the puzzle every investor is trying to solve right now.